We're 2.5 hours into trading. It is Tuesday, April 20th. Hello, traders. Let's take a look at our picks recently, and then let's take a look at the market. Let's see what else we can find for today. I gave you this pick on Sunday evening, Dell Computer. I'd mentioned to you this stock looked really, really good. I also featured it yesterday in my video, and I showed you how the stock had climbed. If you bought it on the open Monday morning, you're a happy camper. But I also warned you that you needed to take profits on the stock. Why? Because look what the market had done. Down, 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 down. The stock was up. I'd mentioned to you, consider yourself fortunate that you're trading relative strength. That is our edge. That's what we use for all of our trades because the stock continued to fuel higher. This is a sign that the bid is super strong. Normally, profit takers would smack that stock down, down, down. 75% of all stocks follow the market. In this case, you've got one of the 25%, and this market decline shows you just how aggressive the buyers are. But once you get up to this level here and you've seen I am on the wrong side of the market, you have to get out. And that is the cushion that's so critical to trading relative strength. That's why we use it. So yes, you should have taken profits on this. So the stock that I highlighted yesterday was PENN, P-E-N-N. This was a short that I suggested for day trading. And you can see how weak the stock was. I'm going to take the SPY overlay off, and we'll take a look at that daily chart and see how that stock set up. You can see gorgeous downward sloping trend line here. You can see lower highs, a breakdown through horizontal support here and here. Let's put up the major moving averages, the 200-day and the 100-day. And there you can see it had also breached the 100-day moving average. Very solid pick on a multitude of indicators. So the stock continued to sell off yesterday. I had mentioned to you I would not take any overnight shorts because the market still has not shown any technical vulnerability. Markets still look good, so you don't want to carry any overnight shorts. Stock had a little bit of a pop this morning, got back to the close from yesterday, and then as we made a new low of the day, absolutely, you want to be back on that short. You can see how weak it's been. Let's take a look at the market, see what it's doing. Here's the tell from yesterday. Please go back and watch the prior day's videos. If you're new to this channel, I don't want you to just have blind faith in what I say. Go back and look at what I posted the previous day. Get a sense for my accuracy. So you can see how the market was stair-stepping its way lower. I had mentioned that we had some green candles in between, and there you can see, and that we made a marginal new low right at this stage yesterday. But I'd also mentioned to you that we had the market drifting lower right about in this point when I did the video yesterday with a rising 1OP indicator. Typically, when the 1OP indicator is rising, you would expect a rising market. When that is not true, that is what we call a bearish divergence. Indicator up, market drifting lower. I had mentioned to you, I feel that the damage on the downside is going to be relatively contained today because we're seeing these nice green candles in here. That tells me that buyers are still engaged, but that we are going to see a new low of the day. Well, there's what happened. We established a new low, and the market could not get off the deck. So there was no bounce. Buyers who had been aggressive before were no longer aggressive. They were very passive. And you could see how the market was not able to rally above this level. Stocks almost closing on their low of the day. This morning, we come in, we get a nice little jump early in the day. I had mentioned to everyone in the chat room, don't buy this early bounce right here. We have a 1OP bearish cross pending. And now you can see, as soon as that cross came into play, right there, that's where it said, be careful, time to get short. It didn't say get short here, didn't say get short here, or get short here. This is a predictive indicator. Now you can see right in here that we have a bullish cross. I'd mentioned in the chat room, with this type of selling momentum and this type of trend, this first bullish cross is likely to be a bearish divergence. Same thing as yesterday. Indicator up, 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 market drifting lower. In this case, you can see that even though we had this bullish cross from right here, the market's still about unchanged. And now when we get the next bearish cross, we're going to make a new low of the day. I'm expecting to see a new low of the day today. I think that we'll establish that this afternoon, and then we'll probably waffle around and have a tiny little bounce near the close. Let's take a look at the daily chart to see where those support levels might come into play. I've been mentioning market is overextended here. It's riding the upper line from the trading channel that it's been in. 3 steps forward, 2 steps backward, 3 steps forward, 2 steps backward, 3 steps forward, probably 2 steps backwards. So you need it to be taking profits on your long positions. I've been mentioning that during the course of the last week. Do I think that there's a gigantic market meltdown coming? No, I don't. I feel that any pullback is going to present us with a buying opportunity once we find support. What would be a logical support level? Well, you can see that there was a gap right here that needs to be filled. There's a gap in here. So those two should be filled, and you can see that that close was roughly SPY 400. That is a nice round number. I believe that we could come and close that. We might even close this tiny little gap right in here, and that would also check that most recent breakout. So I think that's as bad as it could possibly get. We've got earnings season starting. Earnings have been great. There's been no issue with earnings. Revenues on average have been up about 7% year over year. About 82% of the companies have exceeded earnings estimates. That's better than expected. And those are year over year numbers. Only about 10% of the S&P 500 is reported. Those earnings reports are going to ramp up this week. Next week is the mega cap tech stocks, and that's usually very good for the market. There's a lot of optimism. So I'm looking at support probably holding, a little bit of a bounce on that news, lower high, double top, and then perhaps once those mega caps announce, a little bit of the air gets taken out of the balloon. But I'm not looking for any big pullbacks right now. I am waiting for an opportunity to get long. I want to see the market come in, and then I'll be ready to put on another round of bullish put spreads and to consider long positions. The economy right now is clipping along. That's good. COVID cases a little bit higher. So that's got the market worried. Vaccination sitting at 3 million pace per day. The big overnight news was that the State Department is issuing a do not travel warning for 80% of the countries. That's not particularly good, and we are seeing coronavirus cases globally increase pretty rapidly. Europe's in bad shape. Asia is now in bad shape. So that is going to hamper global economic growth. Domestically, I think everything is still in pretty good shape. So hopefully you've been able to scale out of your positions, take some profits. I do believe that we're going to see more weakness today. I feel that this is a support level right here. We'll hover over the top of that green candle. That was 411.50, let's call it. And if you look at the low today, it's about 410.50. So we've already poked through and tested that. We really want to see this opening from this long green candle preserved, and the low is around 408.26. So we'll see. Expect more selling pressure today. A lot of bullish sentiment in here. Bullish speculators who have weak hands are going to be flushed out of the market, and then we'll have another buying opportunity that sets up. So as the market comes in, it serves two purposes for us. Number one, it gives us a better entry point for our long positions. Super important. Number two, it makes it very easy for us to identify relative strength. When the market is pulling back, pulling back, pulling back, which stocks are holding their own? Which stocks want to move higher? Those are going to be the stocks that will rebound the fastest once the market finds support. Let's go in and find a couple of them, then let's take a look and see what we can find on the bearish side for day trading. I do not like shorting this market. There are too many good things happening right now for the market, so I do not want to encourage shorting. IBM. Let's take a look at that. IBM announced earnings, big breakout through horizontal resistance. Looks excellent. Look at that 5-minute chart. Got to get excited about that. Look at how well it's holding the gains. You got your upward sloping trend line right here. Big volume, obviously. So that also looks very, very good. But there is a little bit of an issue. You can see the last time IBM came out with great earnings. Look at that. Oh, here we go. We're going to break out to a new high. Everything looks fantastic. And then, no. Actually, that was earnings after the close and a big gap down. So this is actually earnings before the open and a big gap higher. So I think that this support level right here, if IBM can hold that 136 level for about another 2 or 3 days in a soft market, then I think you can come in and buy IBM, but it's too early right now. J&J actually looks pretty good. It had earnings before the open, downward sloping trend line, broken to the upside, major moving averages intact, good volume. I like J&J. Merck, I like this. Cup and handle formation through the 100-day moving average. I'd like it even better through the 200-day moving average, but it has room to run. It's at 78.90 roughly, and we've got 79.70. So it's got about 70 or 80 cents that it can move higher. This is not a big mover, but the option premiums are very, very cheap because the stock doesn't move very much. So the option implied volatilities are cheap. You can buy near-term in-the-money options that are trading near parity to take advantage of something like that. But you have to wait for market support. You have to wait for market support. Market first, market first, market first. So even though I'm showing you some attractive stocks that look like they want to move higher, this is not the time to buy. You have to be patient. Try to be in cash. You can day trade short side. That's fine. That's what you should be doing right now. And evaluating, looking, building your wish list. That's how we do this. KCG actually looks pretty good. You can see it's trying to move through this horizontal resistance level. It's got a little bit of room to the upside. Gold in general has done well. I highlighted AEM. There you've got a cup and handle type formation. Breakout right there. That looks good. GOLD also look good. And you can see that's through the 100-day moving average, similar pattern, higher low double bottom through that resistance, through the 100-day moving average. I'm not a big gold buff, so not crazy about it. Out of the charts that I've shown you, I really like MRK the best. PNG looks nice, breaking through the upper end of this compression right here, but know that this is a defensive stock, meaning that when the market's in trouble, you start to see a flight to safety into some of these consumer staple stocks. So those all look good. Let's take a look at the bearish side, though. I really want to focus on some decent bearish day trades because I feel that the market's going to continue to go down. I'm going to click on Pop Bear. Let's see what we've got cooking here. CLNE, love it. Breakdown through horizontal support, breakdown of the 100-day moving average. Going to continue to go down. UAL has the 100-day moving average still intact. APA, I like that. It's poking through that 100-day moving average. Nice little selling right in here. Plenty of room to the 200-day moving average. That looks good. Airlines, automotive stocks also weak today. You can see breakdown there, 50-day moving average. Ford looks like a good short. Win has been really soft. Now, we had a bullish put spread on, and I love this rally right in here. This looked great. We had a bullish flag formation, downward sloping trend line intact. You can see how it held the 50-day moving average. I loved it. There's the flagpole. There's your downward sloping trend line. Look at that. This looks fantastic. So we sold it out of the money bullish put spread, keying off of this technical support right here. And we sold the 124, 122 bullish put spread for 40 cents expiring this Friday. It's a great example of how to manage a trade. So we get this really nice bullish candle in here. We get into the trade, and then, uh-oh, that's kind of a bearish engulfing candle. Stock a little bit lower, a little bit lower, a little bit lower, a little bit lower. That's not the price action I was looking for. I mean, this is a bullish put spread, so time decay is working in my favor. Tick, tick, tick. Time decay eating away at that position. Once we broke that 50-day moving average, this was last week, mind you, and what had the market been doing? Ho ho! Market had been charging higher. When I saw this weakness right in here and the 50-day moving average breached when the market was going higher, I knew if the market got into any kind of trouble, this thing was going to fall apart. So we bought that spread back. We lost a dime on that spread Monday morning. We bought it back on the open. I didn't hesitate. I wanted to reel it back in. Good move. That's how you have to manage your positions. So if you're in a position and you're in it for a reason, and that is that, gee, I think it's going to go higher. I love this breakout above this downward sloping trend line. This is a bullish flag formation. I'm expecting the stock to continue to go higher. When that doesn't happen, red flags already going up. Now, those red flags start to become even more prominent when the stock is weak relative to the market. Ooh, I really don't like this. Another warning. Hey, it just broke a 50-day moving average. That was my first line of support. My next line of support was down here on that horizontal support. Better get out. So with the market making a new high, if this stock was going to go up, it would have been moving with the market. So that's what you have to do when you're managing your bullish put spread positions. Win looks very weak here, but that 100-day moving average is in the way. So I think the profits on any short are relatively capped because of that. VLO, pretty nice. Down through the 50-day moving average, broke that horizontal support right there. That looks like a pretty decent short. JD, horizontal support there below the 200-day moving average. Lots of room on the downside. So if I had to pick one of these shorts that I really like today, let me take a look at a couple of other searches to see something that I can find. Penn was actually nice, but that's getting a little bit overextended on the downside. Boeing. There you've got a double top lower high, horizontal support being breached through the 50-day moving average. That was your breakout. That's support now. That is what I call a failed breakout. I think Boeing's got some downside. I'd almost have to say Boeing would probably be a really decent short in here. Disney, breakout. 1, 2, 3, 4. So that's a major support level. Testing it right now. If it breaks below that 100-day moving average, that will not be good. Disney could be a very good potential short below that 100-day moving average. And you can see market up, up, up. Stock down, down, down. Relative weakness. We also have the 1 OSI indicator that we can overlay. Orange line below zero, relatively weak. By the way, we search for this variable. So if we want to find stocks that are relatively weak, bring up custom search, and then we can use that on any time frame. Stocks that are weak relative to the market on a daily, 4-hour, D1 basis, great option liquidity, heavy volume, stock below prior day's low. Let's use some of these variables and see what we get. That is your list of short candidates right there. You can add all sorts of other variables in here. HA2, negative, that would be a Heikin-Ashi bearish D1 signal. The more of these variables, I don't have any of them lining up here, but the more of these variables that you have intact, the higher your probability of success. So in any event, I'm not returning any search results for that, so I'm a little bit too restrictive, but there are other variables that you can use, and these are the stocks that you want to focus on. Relative weakness being the key point, and heavy volume. So out of the picks, keep an eye on Disney. If it breaks that 100-day moving average, I think that's going to set up for a pretty decent short. Apart from that, I like the Boeing short. I think that's going to set up very nicely. Got everything intact, you would use this downward sloping trend line as your stop. So click GTC, click on the top of that candle, click on that candle. That's got to be your stop. If you want to keep it tighter and you're a shorter term trader, then you use that 50-day moving average as your stop, a close above that stop if you're swing trading. Day trading, you'd want to keep it even tighter. Final check. Let's see what the M5 is doing. And there you can see stock's been weak relative to the market. Big volume today, steady selling. This is the clue. So right now we are 3 hours into trading. I've already told you, market first, market first, market first. Pete thinks that the market is going to stage another leg lower. So we'll click here. Click here. There's our upward sloping trend line. When that's breached, you'd want to be finding shorts. Or if you're more aggressive, you can be watching for it to roll over somewhere up here, wait for that 10p indicator to cross. Now, here's the tell with Boeing. Market up, up, up. That's a nice bounce. That is a nice little market bounce right there. What did Boeing do? Nada. Nothing. That's because the sellers are unloading the shares. If this were oversold and buyers had the upper hand, boink, you'd see a big old rally on it. You don't see that. Boom, boom, boom. They're pounding every bid they can find. Boeing's your short of the day. Thanks for watching. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.